All right, hello, this is Kevin Blue with Pacific One Lending. In this quick presentation, I'm going to show you as a broker how you can increase your revenue without increasing the overhead in your business. Not a lot of brokers really fully grasp or understand, and it's a huge opportunity if this is not something you're already capitalizing on. And really, before I go into the benefits of leveraging a warehouse line, I want to kind of talk to you about what we're looking for as a company. We are a local company in Huntington Beach. We also have a satellite office down in San Diego, California. And we're only looking for a handful of companies to really partner with and be able to help them grow their business and take their businesses to the next level. So, one of the first things is with a traditional broker channel, you now have to disclose YSP. Before 2008, you didn't have to disclose YSP. You could make what you wanted on a loan, whether it be a point, 2, 3 points. A lot of people, probably stay in the range of a 1.5 to 3 points. But you didn't have to disclose YSP, and so, there was no real conversation with the borrower in terms of how much you were or you weren't making. Nowadays, with a traditional broker channel, you have to disclose the YSP, or in other words, yield spread premium, and you get to experience what is not fun, what I like to call commission shock, where the borrower is looking at the GFE or looking at the HUD and going, looking at this section specifically where it says items payable in connection with loan, and you can kind of see where my mouse is. I'll highlight it on the video for you. But you can see the origination charge is, in this case, and these are two very similar loans in terms of balance, but the origination charge is $6,219.35. Now there's a credit of $5,917, and that's just so that the borrower didn't have to come out of pocket. But really the conversation is, it's something that you can overcome, but it's not a fun conversation to have when your borrower calls you up and says, hey, what is this $6,200 that I'm getting charged for the loan? Really it shouldn't be any of their business what you're making, as long as you're working in the best interest of the borrower. You're helping them get funding, probably helping them with one of the biggest financial decisions of their life, either you or one of your agents, and you're offering a valuable service with the highest ethics, integrity, and morals. And why should they know what you're earning? Really they shouldn't. So, with the YSP disclosure, you get a lot of these, you get this commission shock effect where the borrower, may feel, hey, you're earning too much, and now guess what? They're going to go shop around. And the last thing you want is your borrower shopping around because they think that you're earning too much on a deal, or maybe they just decide to pull out and withdraw from the loan entirely. So with no ISP disclosure, you can maximize your revenue and really earn what you deserve to earn per deal without having anyone question you and without the risk of losing any deals. The second thing, and there's only 3 slides, by the way, so we're going to go through this pretty quickly. Like I said, there's a long list of benefits. I'm just going to touch on the biggest ones because at the end of the day, your goal is to increase your revenue, and we're here to help you do that. If there's a win-win, we determine there's a synergy between our two companies. Another thing is uncapped commissions, and this is a big one because a lot of people right now, and you know this if you have signed up with a number of different lenders, but you can only set your compensation every 90 days, right? So when you first signed up with a new lender, they asked you, what did you want your commission to be set at? Or in some cases, they actually dictate to you how much you can earn. There's lenders out there that say, hey, you know what? You can only earn 1% YSP, and that is the maximum you can earn on any deal, right? I mean, isn't that just absurd compared to how it was a few years ago? I mean, you could earn, there were people, my family in particular has been in the industry for 30 plus years. I remember, if you weren't making at least 2 points on a loan, it was like, why even bother? So normal conversation with traditional broker channel, you would say, all right, well, if par rate was 3 and you wanted to earn 2, and I know I'm simplifying things here, but then you would quote the rate at 5, correct? So it doesn't work exactly like that, but it's pretty close, right? So let's say it was 5%. If the market went in your favor, you could earn more with the warehouse line. If the market goes in your favor with the traditional broker channel, you're still only going to make that 2%. If the market goes against you with a traditional broker channel, you might actually risk losing that deal because you have to earn that 2%, right? Or whichever channel you're going through, you have to earn whatever that compensation's set at. It can only be adjusted once every 90 days. So if you're already talking to a borrower and they're expecting a 5% interest rate, but then the market goes up and you haven't locked yet, now you're at risk of losing that loan entirely. And it's not like the good old days where you could say, you know what, I'm just going to take a small hit. I'm still going to give you that 5% that I promised you. I'm going to take a hit to my commission and maybe absorb, $1,000 worth of cost out of my commission to still get this deal done and to still earn, $5, $6, $10,000 on that loan. That's just not possible anymore with a traditional broker channel. You don't have that flexibility. But with a warehouse line, because it is our own money and it is your own money or treated as your own money when you become a broker affiliate with PacOne Lending, you do have that flexibility. So you can say on a particular deal, you know what, the interest rate changed a little bit. I'll take a small hit. I'm still going to give you the rate that I promised you. I'm just going to take a smaller commission. Or if the rate goes in your favor, you can earn that bigger commission. So this is absolutely huge. I know a number of brokers that have just expressed this pain to me of losing deals time and time again because the market goes against them, or not being able to earn more because they quoted something and the market went in their favor. So absolutely enormous. The last thing that I want to share with you is just a few more highlights of the traditional broker channels versus the PacOne Lending warehouse line. A lot of people think that the only way to gain the benefits of a warehouse line is to create their own warehouse line. It's a common misconception. The traditional route with a warehouse line or obtaining a warehouse line is, you've got to have a massive net worth, right? You got to have 2 to 5 million of liquid assets. You got to show that. You have to document it. Not only that, you have to keep it in essentially an escrow account so you can't use that capital. And there's costly minimum and non-usage fees. There's compensation capped. We just touched on that. A lot of times you got to have at least 3 to 5 years industry experience, and it can take months or even years to get approved. I know with our warehouse lines, we've been in the business for 10 years, right? We've been recognized by the mayor of the city of Huntington Beach for providing outstanding service to the community. Those are the types of things, the types of accolades and the type of experience and industry reputation that you have to get approved with these warehouse lines. So it's not something that's easily done. The benefit of becoming a broker affiliate of PacOne Lending, and gaining access to our warehouse lines and all the benefits that go along with it is that you don't have the net worth requirements. There's no net worth requirements, no minimums or usage fees. Commissions are uncapped. You earn 100% commissions on the warehouse lines. You earn up to 100% on the other 20 plus lenders that we have that you're also inheriting relationships with. And that's an important point. You don't have to give up your existing relationships with lenders. You simply add PacOne Lending as an associated company within the MLS. So, you're allowed to have 2 companies. A lot of people ask that question, do I have to get rid of my existing relationships? The answer is absolutely not. You're simply adding to your arsenal. You're adding to your capacity to fund loans. There's no minimum years of experience. Now, we do want to work with people that know what they're doing. And like I said, we do have our own process for evaluating potential partners. We're not looking to work with everyone. We're only looking for a handful of people to really grow with. But you don't have these strict requirements. And best of all, 48 to 72 hours to get approved. It's literally 20 to 25 minutes probably for most people that are organized to fill out our broker application package. It's a very easy sign-up process. And if everything goes well and we determine there's a win-win and a synergy between our 2 companies, you could literally start funding loans in as little as 48 to 72 hours. No net worth requirements, like I said. And, at the end of the day, as a broker, you really have nothing to lose and everything to gain. So, these are just a few of the ways. There's a long list of benefits. I want to keep this video short for the sake of time. But, get back with the individual that invited you to watch this brief presentation about the opportunity, about the partnership experience with Pacific One Lending. And I encourage you to ask a lot of questions, get all of your questions answered, and I look forward to working with you soon.